Okay, folks, welcome to Best Stock Charts for the coming week. And before we get to the charts that we're going to be watching, please make sure to join our discussion group. You can click the link below if you're watching this on the website. If you're watching this on YouTube, you can't click that link. You'll have to go to the website. You could go to the link where the video description is at, and it'll take you right over to the website. Also, I don't post on social media as much as I used to. The reason is that I've been asked not once but twice already to tone it down with regard to my comments with regard to the financial media. I am critical of the financial media, and I will continue to be critical of the financial media because I believe that they are misleading. So, if you want to make sure you get all best stock charts and intra-week commentary, enter your email address anywhere on the website. It'll be sent out to you along with a couple of free trade tutorials. We're not going to be silenced here. I'm going to speak my free mind, and if we have to go around the social media platforms, I'll do so. Because I began this business because I saw just how corrupt the financial news media was, along with the well-dressed, well-spoken salesmen on Wall Street, and that's exactly what they are. Salesmen, not analysts. Let's analyze some charts today. All right, before we go to best stock charts for the coming week, I received several emails over the past 2 weeks about recent trades. How have we done? Well, I'll break the trades out into categories: short-term swing trades and longer-term position trades. Let's start off with BRZU. We went into the new year bearish of the US dollar, and we were correct. It was the worst January in 30 years for the US dollar, and we swing traded the BRZU, which puts you long of Brazil, and we booked profits on BRZU here on the 6th on this bearish key reversal. And I'll go into the reason why I booked profits on BRZU in a moment. It's because of the same reason why we booked profits on our gold mining trade using the NUGT. More on that in a moment. Other short-term swing trades that we put on, BLU, Bluebird Bio. We began buying here on January the 24th on this bullish key reversal. We had a bull flag formation. We broke out, consolidated, a beautiful key reversal off of the 50-day moving average. We added to our position right here on a retest of the 50-day moving average, and the shares skyrocketed. We booked profits as we began to lean into the third standard deviation Bollinger Band in red. So a nice swing trade. The next chart up where we booked profits on, actually I sold covered calls, the 10 strike price, and we were called out of that position. So what I've been doing since we were called out of our position, I've been selling puts and bringing in premium. So we've enjoyed this rally higher on NUGT from all the way down here where we had this bear trap, meaning we broke down below key support only to consolidate and then reverse to launch into a new bull run. You can go back to my 2017 stock market forecast. That was back here. And I said, expect gold, the gold mining names, to rally in 2017. These will be our core positions, and they are up big in 2017. I think the GDXJ, which are the junior miners, they're up about 30% on the year. So we're doing very, very well with our trade of NUGT. I'm still bullish on the shares, and we had a bullish key reversal on Friday. At current, I have no position in NUGT, and I may regret it on Monday morning, especially after the North Koreans launched a intermediate ICBM last evening. So that's bad. So that's geopolitical risk that might send gold higher. So you may be asking, why am I so cautious right now on NUGT? Why didn't I go buying on what was apparently a very bullish day on Friday? The same reason why I went short of NUGT using DUST last week. And this was only a very, very short-term trade. You could see that DUST was leaning into its 2 standard deviation Bollinger Band. That rarely happens, and we knew that it was going to be a rally fairly soon. So we built a position on DUST. We booked profits here on the 9th, and we exited that trade, and we are flat in our gold mining position. Not short, not long. Now, why were we cautious of NUGT and gold? Several reasons. One, first and foremost, we had 6 consecutive down weeks on the US dollar. This is a chart, weekly chart of the UUP. We bounced off of critical support, and I've been talking about this with members for several weeks, that I was expecting to see support at 25.75. We got it. Last week, we flashed a bullish reversal off of that low. So we closed higher on the week. We're beginning to see Stokes hook up, and anybody that trades commodities, or especially gold and the gold mining names, you need to keep in mind that the dollar and gold and the gold miners trade inversely of each other. Are there times like last week where they could both trade higher? Absolutely, but that is the exception and not the norm. So I think that there is a threat of the US dollar continuing to rally, and I'm not saying that I believe the dollar is going to rally to new all-time highs. I think that we will get a brief counter-trend rally, and we will probably fail to break out to new highs. When we do that, or if and when we do that, I should say, and we break down below key support levels once again, the trend for the US dollar will then be down. At current, it remains up. The dollar is still in a longer-term bull run. It has yet to break down. Members will be talking more about the dollar and our strategy for commodities on the week ahead commentary immediately following best stock charts today. And you need to be a member to get that analysis. And we have a 14-day free trial. Why else am I cautious about being long of gold and the gold mining names? Take a look at the GLD weekly chart. We gapped higher last week, up it into the declining 200 period moving average, which is going to act as a declining ceiling. We did close off of the highs last week, which implies that you had some profit takers as we ran into that moving average. Volume last week was about average on a weekly basis. So I think that we may get a pause in the rally of the gold and gold mining names until the rally in the US dollar is resolved. Either the dollar breaks out to new all-time highs, or it rolls over and breaks down. If it rallies up and through all-time highs, you can expect to see the gold trade pause or pull back. If it fails, meaning the dollar fails to take out new highs, you should expect to see the gold and gold mining names continue higher. So what was the catalyst that I believed, and I mentioned this with members on last week's market wrap, twice last week, going into the next trading day, they were educated on what I was looking at. The US dollar versus the Japanese yen has been a ruthless sell-off for the US dollar. The last I had spoken about the US dollar Japanese trade being a near-term threat to our gold mining trade was right here on February the 8th, and I discussed this on Market Wrap. And I mentioned, note that we are consolidating here, and that we had resistance directly above that we've been testing, and the following day we ripped right through it. And we were short of the gold mining names, but we didn't expect to stay short very long. We took our profits and we moved to the sideline. Fast forward to Friday, we had a hollow candlestick at resistance, so we can expect possibly a pullback on the US dollar Japanese yen trade, and that will probably mean a little bit of weakness in the short term for the US dollar. Does that mean that the dollar rally versus last week is over? I don't think so. I think that there's still a threat out there. So I'm being cautious. So we'll discuss how we plan on getting long once again of NUGT on the week ahead commentary with members. And we could either A, open up a small position in the common shares on any breakout, or B, I might sell put, not buy them, which is a bearish play, but sell them, which is a bullish play, meaning I bring in premium and I discount my basis cost by bringing that premium. And that's what we've been doing. Last week, we went into the week. I had sold the 1250 puts the prior week, bringing in premium. The shares rallied on Monday. We made profits on that position. I closed out that trade right before we went short of the gold mining names, and we booked profits there. So right now we're trading in and out of NUGT in a very deliberate way because I have concern about the strength of the U.S. dollar possibly rallying back. Once we see the U.S. dollar finally break down hard, then we'll become aggressively long of NUGT, gold, and other commodities that are inversely correlated to the U.S. dollar. And our last stock that we traded, and I mentioned this stock a few weeks ago, it was UVV, an extreme overbought stock. We got short right about here, and the shares just rolled over hard. We booked profits right here on the 30th, so I didn't enjoy the final push down, but still a nice profit. And why did we get short of UVV when the shares were in fuego? RSI on a daily basis was well above 90, Ultimate Oscillator well above 85, and you had an ADX signal line, which was well above 65. So the risk to reward, believe it or not, was far in our favor because what is the probability of UVV continuing up and beyond an RSI of what I believe was about 92 to 93? What's the probability of that rally continuing? It was very low. So a great trade to the short side. We did not get long of it, and I don't plan on shorting it again anytime soon because our edge is now gone. All right, let's talk about the health of the overall markets in a very brief way. And I'll go into far more detail on the week ahead commentary, which I break out into two commentaries. One is Market Pulse Check, which is where I review the health of the overall markets, and I'll run through all of the indexes, the volatility index, the U.S. dollar once again, to do a pulse check of where I believe the markets are heading in the coming week. And then I discuss in greater detail the charts on Best Stock Charts, which I believe show the best risk to reward entry point for the coming week. And we'll go into multi-period charts, meaning daily charts, which I'm going to go over with you folks today, but we're going to go over in greater detail those charts, which I think that we'll be involved with early next week using weekly charts and intraday charts. It's a process which I call multi-period charting. And then, of course, we'll discuss our current positions. All right, so briefly, the VIX. We closed down once again on Friday at 10.85. We closed off the lows of the day. We are nearing precariously low levels on the VIX. And as I always like to tell members, when the VIX is low, you have to go. When the VIX is high, you have to buy. Monthly chart. Now, I've been mentioning to members for the past several trading days, I will not be the least bit surprised tomorrow to wake up and see the futures bright green, up triple digits on the Dow Jones, only to see the shares reverse and close lower on the day on rising down volume. Because the complacency in this market is just incredible. Ever since the Dow Jones hit 20,000, the retail investor has run in and the VIX has dropped to very low levels, and we haven't been down at these levels since July of 2014, where we had a huge sell-off into August. If we break down and close with a 9 handle, that will be the first time it has happened since back just prior to the financial crisis. And that was in February of 2007. So folks, I'm officially warning, please, I don't care if you're a paying member or not. I don't want to see anybody losing money. Appreciate where we are at on the VIX. It cannot be ignored. And again, when the VIX is low, you have to go. Meaning, set your stops, book some profits. I'm not saying to sell all of your long positions. At least think about an exit strategy. And when the VIX is high, you have to buy. We'll be looking to buy a ton of stock once we see the VIX skyrocket. Not until then. So despite the fact that the markets are breaking out to new all-time highs, you can appreciate that I am still bearish on this market because we've been here before and it doesn't end pretty, which is why the first stock that I'm going to be discussing, or ETF I should say, that I'll be discussing is the TZA. While the TZA did close down below key support on Friday, I'm going to give this a little bit of room. And I'm going to be looking to build a position on the TZA, which puts you short of the Russell 2000. And while I wouldn't go buying it on Monday morning, I would consider it if we get a bullish key reversal on the day, because what I think might be setting up here is a bear trap, meaning you have a lot of traders out there, retail traders, buying the market with very low volatility, and what they might be buying into is a bull trap. And if I said bear trap earlier, I meant bull trap. They may be buying into a bull trap in this market. And again, just as it didn't end well for shorts of the gold mining names back here when we broke down below key support on NUGT, it won't end well for longs who are buying into this market at this stage of the game. So the TZA is definitely on our watch list. A bunch of shorts that we're looking at this coming week, and these are short-term swing trades, in and out. SWIR closed on Friday with RSI above 90. We saw some topping action, some profit taking late in the day. Volume is still strong. We don't want to fight these guys, but soon we'll be looking to get short of SWIR. Great earnings. I'm not going to be a bit surprised if they continue with higher. But let's face it, we're trading above the third standard deviation Bollinger Band. It's not supposed to be here. It's not supposed to have RSI above 90. This, folks, will not last. We are going to get a pullback. So SWIR definitely is short this coming week. And members, we're going to be going over SWIR on the week ahead commentary, so stay tuned for more analysis using the weekly and intraday charts. Why the weekly charts? We want to identify if and where there is historical resistance. Why the intraday charts is to identify, do we have any intraday divergences that are setting up that could have a short early on, or that are warning us, you know what, we may see a continuation rally on Monday. We may need to wait until late in the day before we open up a short position. So more to come, members. CLLS, we've had 6 consecutive up days. We're leaning into the third standard deviation Bollinger Band. Does that mean in and of itself we short the shares on Monday? No way. However, it's getting to a level where it becomes interesting. Why? RSI is at 74.77. In my book, no great reason to go shorting the shares. It can go a lot higher. However, we are nearing resistance. Volume is well above average, but it's beginning to decline. MACD histogram, still in an uptrend, not to be shorted just yet, but soon we'll see an opportunity to short the shares, a very short-term swing trade to the downside, and we'll look to book those profits, move to the sidelines. Apple. We're definitely going to be talking about this one on the week ahead commentary with members. We have RSI on Apple at 87.20. Can it head higher? Absolutely. But on Friday, we flashed a bearish key reversal on the day. On volume, that was very light. We continue to lean into the 2 standard deviation Bollinger Band. MACD histogram has leveled off, is dropping down some. So Apple is definitely a short candidate as we move into the new trading week. And again, on the week ahead commentary, I'll be talking more with members about the weekly chart, the intraday charts to identify the best risk to reward entry points. Because let's face it, it's Apple. If you're going to short Apple, you better have a game plan. And we do not plan on staying long with this short trade. Next chart up, ARNC, daily chart. We have RSI above 90. This is a short trade. We are well above the 2 standard deviation Bollinger Band. Probably going to be leaning into the 3 standard deviation Bollinger Band as we were back here. But the froth, that oversold condition, was alleviated the following day, setting the stage for another move higher. The 50-day moving average is going to cross above the 200-day moving average. We'll probably see another move higher. We'll be looking to short into a continuation rally. What concerns me about going short right now? Volume. It's not only above average, it's been rising sequentially. So this continuation move higher is being led on rising up volume. That's a sign of institutional accumulation. I don't want to fight these guys just yet. MACD histogram has really gone parabolic. So again, as I like to do on the week ahead commentary with members, is we'll discuss, sure, the daily chart again, but the weekly chart. Do we have any historical resistance above that'll provide us a good risk to reward entry point? And are the intraday charts implying that we have a good risk to reward entry point? Or should we wait for a better entry point? ARNC, Airconic Inc. That's the weekly chart we'll be discussing on the week ahead commentary. But let's first talk about the daily chart for our best stock charts. We have RSI above 90, so very, very overbought. And if you're reading Technical Analysis for Dummies, they'll tell you to short a stock once the RSI goes above 70. Let's play that out here. It went above 70 here on January the 25th. That was down here. So if you use these silly rules of thumb that these books tell you to use to sell their own books, you're going to go broke because you would have missed out on this entire move higher. I like stocks well into the 80s or into the 90s to short using the RSI, but you can't use one indicator alone. You need to use price action. You need to use your volume bars. Are the volume bars rising or are they declining to the upside? If they're rising, you better watch out, especially if those volume bars are above average because you're fighting institutions. So this is why we need to use our multi-period charting strategy, which is to identify on a weekly or monthly chart where we have historical resistance, if any, with ARNC. And if we're lucky enough to maintain an RSI above 90 and we begin hitting historical resistance, well then, that's a great risk to reward entry point. So we're going to do further analysis on ARNC with members on the week ahead commentary. So if you're not currently a member, sign up for the 14-day free trial offer. Next chart up, Amazon. I'm going to talk about both the weekly and the daily chart on Amazon because frankly, I am not 100% sure which way we're going to go. The weekly chart takes precedence in importance over the daily chart because you have a 5-day period, which in the end gives you a snapshot of the health of the stock. And while the prior week we had a bearish key reversal, last week we had a bullish key reversal. So if anything, I think that we may move higher on Amazon and we'll probably try to take out this high. But I will caution, we have a lower high. The prior high was 847.21 back in September. New lower high was in January at 834. Do we break out or do we break down? Which leads me to the daily chart where you saw lower highs get put in and we broke down on the 3rd. Now we're limping back on very, very light and sequentially declining down volume. You can go back to the stocks I've spoken about earlier in this video. I've spoken about good rising up volume, which is very bad for shorts. But this kind of volume, declining sequential up volume, is very, very bad for longs. There's no institutional demand here. This is retail buying. This is what this volume action tells us. So on a daily chart, I'm very, very bearish on Amazon. On a weekly chart, I'm bullish. How will this get resolved? I'll discuss that with members on the week ahead commentary because we do have a strategy of how we either plan to A, trade Amazon long or B, short Amazon. Members, stay tuned. Next chart up, we're looking to short SNOA, Sonoma Pharmaceuticals, RSI 91.08. Guess what, folks? It can go higher. You have your stochastics, which are hooking up. I think that we will see higher highs on Monday. We're not going to simply use an RSI above 90 to say, okay, it's good to short now. You can get your face ripped off. And I don't want that to happen to anyone. Volume on Friday, very, very high. So this is institutional accumulation. You don't want to fight institutions. ADX above 60, very, very attractive. We can see signal line on ADX go above 65. When we see that, that puts the risk to reward in our favor. We're not there yet. Again, we can continue to see higher highs. Members, more to come on our strategy for shorting SNOA. And that's it for this week, folks, for Best Stock Charts. Members, stay tuned for the week ahead commentary, where we'll discuss the health of the overall markets and we'll discuss in greater detail the charts I just went over on best stock charts, and we'll formulate a strategy for the coming week. I'll also provide analysis about the overall markets. Where do I think that they're heading? So if you're not currently a member, please sign up for the 14-day free trial offer. Again, I'm not posting as much as social media, so enter your email address to get all of the best stock charts in the future. Everybody have a great remainder of your weekend, and I'll talk to you soon. Be well.